Want to see someone systematically disprove everything you have read about trading stocks and expose how and why you will consistently lose money if you aren't doing it right? Click the link in the description to check it out for yourself. But now for today's video.
The question, how do I get into stock trading? Is there a beginner's guide? How does investing work? Answer by Abhishek Kar. First of all, the question leaves a bit of ambiguity. Being a pro, I must take the earnest endeavor to inform the readers that both stock trading and investing are different terms and cannot be used interchangeably. Now, coming back to the first part of the question, how can you get into stock market? It's easy. Get in touch with a broker. Since all have sales target, they would love to allure you and urge you to complete the documentations at the earliest. Open the account. Transfer some cash, which can be as low as 500 Indian rupees in some cases, and just start. Well, now if you meant how should I start trading, there would be some more additions. Now, trading is an art which is defamed from centuries for the amount of losses which people have made doing that. As a matter of fact, people are so scared of it that they don't even wish to talk about it openly. Yeah, we do see a handful of analysts on TV these days promoting day trades, but believe me, all the blue channel guys themselves don't trade. They are either the ones who burnt money badly into market and became analysts, or they did a few courses and started calling themselves pioneer. So, the real question is, how can a beginner start trading and also remain consistently profitable? The first thing I would suggest is to learn technical analysis. You should know in depth about trend indicators, volume indicators, and price action-based indicators. The next thing you need to understand is that charts speak more than people are ready to listen. Candles tell a story, and the ones who interpret it well finally realize the secrets of successful trading. Learn more about candles, like candlesticks, line charts, bar charts, etc. My favorite, candles. Learn about trading discipline, and please take this concept most seriously. The issue with we humans is that we are emotional creatures, and often our emotions lead to a lot of troubles, be it relationships or be it trading. One of the biggest reasons why you keep listening to this fact that 95% of the traders are losing money is because they don't keep a check on emotions. They know they need to cut losses, but emotions hold them back until there is a bigger loss and broker shuns the account. I occasionally hold positions which are in M2M losses, but not due to emotions, but because my technicals are still intact. The stock hasn't breached the levels, and I believe in time it will recover, and that happens. But I never hold a stock when it breaches important levels by being hopelessly optimistic that the things would turn like a miracle. Don't underestimate the power of old school technicals. They still work the best. With advent of technology and increase in the supply of information, people have started using new technicals like Orion, Supertrend, etc. I still don't use them to place final bets and rely on old school technicals. Old is gold. Don't blindly follow a tip provider, newspaper reco, or blue channel expert. The only reason why I watch business channels in their reco is to just understand what's happening in the market. I don't say that's bad. You get to know what commonly the street is expecting: mergers, deals, and results. It helps to scan a lot of stocks. As being traders, one needs to play with a bit of volatility. But I never take their recos. I use my analysis and trade. I still remember, last series on A Day, all brokers, experts, and channels were asking to buy a stock called DLF, and I saw a technical support breakout and sold. I got a swing of 5% in a day and wondered about poor retailers who followed the tip without putting SL and burnt money. These sound simple, but as I say, trading isn't rocket science. It's just that people are not willing to put in the efforts for learning, which is the most important aspect. Considering the same, I am willing to take the charge to guide a few people, details of which are mentioned in my profile. Now your next question, how investing works. The basic is simple. Companies who want to raise additional interest-free funds for expansion and growth seek out for help, and the public is offered some ownership in the name of shares. The company gets money while public gets ownership of shares to the extent of their holdings. I am an avid believer that one reason why India's economy is little slower as compared to the developed ones is also because just 2% of public is investing. It's sad but truth that we still are slaves of foreigners as they control our markets. Yes, I am talking about the FIs, as they have the major investments here. In short, one fine day our bureaucrats decide and conclude a less friendly international policy for investors. Result: boom. Our markets crash. And we don't have sufficient investors to provide cushion. Hence, I urge people to do some investments regularly. Now, in investments the following things happen. You can hold on to a share for ages without selling. You get tax-free returns if you hold for more than a year. You get tax-free dividends. You become owners of the company. You get more shares during bonus and splits, which could make you a millionaire too. You help the industrial world grow with your contribution in form of investing. Investments need you to understand fundamental analysis. It's when a company starts becoming fundamentally stronger that you start earning good money. Investments need time for analysis of balance sheets, ratios, knowing about promoters, etc. It's good if you are particularly engaged in some other profession and don't have much time for trading. I hope the answer helps people. AK Trade Guru. Abhishek Kar. Answer by Will Carruthers. There are literally tons of books out there about starting up, but you need to hear a couple things first. Trading versus investing. You use the words trading and investing interchangeably in your question, but you need to know that a trader is not the same thing as an investor. An investor is using their wealth, their savings, to buy shares in a company or a fund that they believe is in the right market with the right management and using the right strategies to make their shares more valuable over time, and or one that they feel will pay a desirable amount of money to them in the form of dividends. This kind of research into a company is exemplified by fundamental analysis, and this is the kind of talk you will generally hear on CNBC or Bloomberg. A really good rate of return could be 12% to 15% per year, and an investor would tend to ride out the ups and downs in the market to chase a long-term gain. It is the type of activity in the stock market that requires the least time per day for its practitioners, and is a great complement to a well-paid career. A trader, on the other hand, is someone devoting considerably more time to the stock market and or other markets. They are more likely than the investor to be deriving most or all of their income from trading, and they have different goals. A good rate of return depends on the type of investing done. A swing trader could call 60% annual return a good rate, while a day trader would be shooting for 200% or more. Traders do not hold stocks for long periods of time, sometimes only owning a stock for a week, or perhaps even for only a few seconds. Swing traders are people who devote considerable time to the markets, but could still hold the job, albeit perhaps a less demanding one. They do care about a company's fundamentals to a degree, but they more widely use technical analysis and earnings and news reports and try to enter at points where they are confident a multi-day up or down move will start. Day traders, as the name implies, enter and leave their trades within the same day. There is almost no consideration of a company's fundamentals, and depending on the strategies the day trader employs, there may or may not be emphasis on traditional technical analysis. The summation. The first thing to decide is what kind of trader or investor you want to be. Don't just use my descriptions, I have not used the space to do each justice. Also, you have to make an honest appraisal of your available time, your willingness to follow the market, the money you can actually afford to invest, and your aptitude for math. Most importantly, you have to decide what your acceptable level of risk would be. But, before you can intelligently answer these questions, you need more information. So, start reading. TL, Drive. Pick a couple topics to look into. Hit up Amazon, Barnes and Noble, or Google, and start reading. Answer by Wenjia Wang. Stock Market Insights, Seeking Alpha, Finviz.com, Stock Screener, Investing.com, stock market quotes and financial news. Free stock charts and quotes online. These websites are suitable for both long-term investors and experienced traders. They are consisting of both fundamental and technical analysis. More importantly, they share their invaluable insights and reorganized news feed to facilitate real-time trading not only in stock but also indices, options, commodities and forex. More than 1 million hardcovers sold. Now available for the first time in paperback. The classic text annotated to update Graham's timeless wisdom for today's market conditions. The greatest investment advisor of the 20th century, Benjamin Graham taught and inspired people worldwide. Graham's philosophy of value investing, which shields investors from substantial error and teaches them to develop long-term strategies, has made The Intelligent Investor the stock market Bible ever since its original publication in 1949. Over the years, market developments have proven the wisdom of Graham's strategies. While preserving the integrity of Graham's original text, this revised edition includes updated commentary by noted financial journalist Jason Zweig, whose perspective incorporates the realities of today's market, draws parallels between Graham's examples and today's financial headlines, and gives readers a more thorough understanding of how to apply Graham's principles. Vital and indispensable, this Harper Business Essentials edition of The Intelligent Investor is the most important book you will ever read on how to reach your financial goals. Always have your investment checklist. 1. Basic fundamental analysis. A. PE ratio. B. NTA. C. Book value. Intrinsic value. D. EBITDA. E. EPS. F. Debt to equity ratio. G. Debt to asset ratio. H. Quarter by quarter net earning. 2. Financial analysis modeling. A. Business overview. B. Business valuation. C. Capital budgeting. D. Supply chain and competitors. E. Cost of capital calculations. F. Financial statement analysis. Rho. Do. Pawn equation. 3. Risk management. 4. Insider relationships. 5. Macroeconomics issue and affairs. 6. Advanced technical analysis. A. Determining best discounted price. B. Knowing where to take profit. TP. C. Determining where to cut loss. D. Determining the momentum of the stocks. E. Finding the demands of the stocks. F. Drafting plans for both short and long term for the stocks.